Something extraordinary just happened in global markets. And most investors fully understand the impact until Monday morning. One of the most critical shipping lanes on Earth, the Strait of HORMUZ, has effectively shut down after escalating conflict in the Middle East. Tanker traffic has collapsed, energy markets are panicking, and oil prices are already surging. But here's the part that many people are missing. This event could trigger a chain reaction that reaches far beyond oil, because whenever a geopolitical shock threatens global energy supply, financial markets begin repricing risk across commodities, currencies, and safe haven assets. And historically, silver has been one of the metals that reacts the fastest. So the question investors are asking right now is simple. Did the world just experience a black swan event that could reprice silver before markets even open on Monday? To understand the significance of this event, you first need to understand how critical the Strait of Hormuz actually is. This narrow waterway between Iran and Oman is the single most important energy choke point in the world. Roughly, 20% of global oil supply normally passes through it every day. But during the latest escalation in the regional conflict, traffic through the strait has nearly collapsed. Reports indicate ship movements dropped by more than 90%, leaving hundreds of tankers stranded and sending shockwaves through global markets. Several vessels have been damaged. Shipping companies have suspended routes, and insurance coverage for ships entering the region has been pulled due to extreme risk. In practical terms, that means the world's most important oil pipeline at sea is suddenly disrupted. Energy markets reacted immediately. Oil prices surged sharply as traders began pricing in the possibility that global supply could tighten dramatically. Some banks now warn that oil could surge above 100 per barrel if flows through the strait dawn to recover quickly. And when oil spikes suddenly, it sends ripples through the entire global economy. Transportation becomes more expensive, manufacturing costs rise, shipping slows down, and inflation begins to climb again. This chain reaction is exactly why geopolitical shocks like this can trigger major moves in financial markets. In finance, a black swan event is something rare, unexpected, and capable of reshaping markets very quickly. The closure or disruption of the Strait of Hormuz fits that definition perfectly. It's a single choke point controlling a massive portion of global energy supply. When that choke point is threatened, the entire economic system has to rapidly adjust. Markets start asking new questions. Will inflation spike again? Will central banks delay interest rate cuts? Will global trade slow down? And when those questions appear suddenly, investors rush into assets that historically perform well during crises. That's where precious metals enter the picture. During geopolitical crises, investors tend to move money into assets that are perceived as stable stores of value. Gold is usually the first to react, but silver often follows quickly, sometimes with even larger percentage moves because its market is smaller and more volatile. Recent trading already showed this pattern. Gold and silver prices climbed as investors rushed into safe haven assets amid the escalating Middle East conflict. That type of movement can accelerate rapidly if the crisis continues. Silver is particularly interesting during events like this because it sits at the intersection of two powerful forces. First, it behaves like a precious metal. Investors buy silver during periods of financial uncertainty because it can act as a hedge against inflation and currency instability. But second, silver is also a critical industrial metal used in electronics, renewable energy systems, and advanced technologies. This means that geopolitical shocks can influence silver from multiple directions at the same time. Energy crises increase inflation fears, which boosts demand for precious metals. But supply chain disruptions can also increase the cost of mining, refining, and transporting metals. Together, those forces can create sudden price moves. That brings us to the most important question facing markets right now. What happens when trading opens again? Commodity markets often react instantly to geopolitical events that occur over weekends. If oil continues surging and tensions remain high, investors could rush into safe haven assets before the first trading session even stabilizes. And because silver markets are relatively small compared to gold or oil, even moderate institutional flows can create significant price volatility. That is why some analysts believe silver could experience one of its fastest repricing moves if the crisis continues. Another reason silver could move is the inflation domino effect. Here's how it works. First, disruptions in Hormuz push oil prices higher. Second, higher oil prices increase global transportation and manufacturing costs. Third, those costs raise inflation expectations. And finally, investors buy hard assets like gold and silver to protect their purchasing power. This chain reaction has occurred many times in modern history. The oil shocks of the 1970s, for example, triggered massive inflation and eventually helped drive precious metals to record highs. Right now, traders are monitoring three key signals. First, shipping traffic through the Strait of Hormuz. If tanker traffic begins recovering, markets may calm down quickly. Second, oil prices. If oil continues rising aggressively, inflation expectations will increase. And third, Geopolitical escalation. If the conflict spreads or attacks on shipping continue, markets may price in a longer-term disruption. Each of these factors could influence precious metals markets in the coming days. The Strait of Hormuz crisis is a reminder of how fragile global markets can be. One narrow waterway, just a few miles wide, controls a huge portion of the world's energy supply. When that choke point becomes unstable, the effects ripple across the entire financial system. Oil prices surge, shipping routes freeze, inflation fears return, and investors begin searching for safe places to protect their wealth. That's why events like this can trigger sudden moves in assets like gold and silver. So when markets reopen, traders around the world will be watching one thing closely. Whether this geopolitical shock becomes just another headline, or the black swan that reprices silver before Monday morning.